All right. Good afternoon, everyone. Thank you all so much for taking the time to join us today. My name is Mark Bolger with Pinnacle Financial Services over in the Life and Annuity Department, and we're very happy to have our good friends over at Physicians Mutual join us today. We have Trevor Braun Sr. and Trevor Braun Jr., aka Mike Story, helping us out today. They're going to go over the brand new life insurance product that Physicians Mutual just came out with recently, just about a month ago. Most of you have seen this if you're already contracted with Physicians Mutual. So lots of exciting things that we're going to talk about today. I just wanted to do a quick intro. If you are a brand new agent to Pinnacle, and you're looking to get contracted with this, you can always just go onto the Pinnacle website, pfsinsurance.com, and you can send an email right at the top where it says support@pfsinsurance.com. Let us know that you'd like to get contracted, and we'll more than happily push that out. Or you can simply just go on our main page right here where it says Contract Now. Go ahead and click that. You can request the Physicians Mutual contract. We'll go ahead and push everything out for you within 24 hours. And then finally, if you are not affiliated with Pinnacle, but you are looking to join, whether to pick up this product or other products, you can simply just go on to the pfsinsurance.com, click on this contract now, and that will direct you to our onboarding contracting link. So just wanted to touch base with that real quick. We're going to be probably about a half hour or so, going through all the features with Physicians Mutual. So without further ado, let me just get it over to Trevor Braun Sr. here. And
AKA
Trevor,
Mike Story. Hey, Mark, real quick before you go on, man, how many people do we have on? I'm looking under the people tab. I can't see. I can only see you and the panelists.
yeah, I don't know if I can see yet, but I have to expand something. This is a brand new interface that they're working with
I know.
GoToWebinar,
I'm
so
trying to figure it all
apologize
out.
with that.
I was just curious. All right,
Yeah,
Trevor
no
Brown
worries.
Sr.
I'll get all that stuff over to you afterwards. So, Trevor Senior, you should be able to share. Go ahead and click share your screen. Perfect. I can see your screen, so we're good.
Okay, I'm trying to make it a little bit bigger. It won't allow me to make it any bigger, so we'll just go with this. How about that?
That works. We appreciate
Okay,
it.
we'll do this. There we go. How about that? Well, thank you. I greatly appreciate
Perfect.
you having us today. And if you have any questions, holler at me or anything you want to put in the chat. Maybe just yell out at me, and I'll stop and we'll answer those questions. Because, Mark, what I've seen some of the time is that it's best to answer those questions right away, because then they pile up and then a lot of people don't stay on and whatever it may be. I like to just answer those right away if we can. So this exciting here. It's for the first time that I introduced to everybody. This is the first time that Physicians Mutual has designed a product with the broker in mind. The first time ever. So it's kind of exciting. This was launched on May 11th of last month. So it's already out there. We're having some good success with it. I think you're going to see how competitive this whole life term perm blend is in the marketplace. And I'm going to actually show you some competitor analysis as we get towards the end too. So let me just jump into this real quick. This is the Physicians Mutual corporate headquarters in Omaha, Nebraska. One of the vision sentences that we always talk about is we empower people from all walks of life to enjoy the financial security they deserve. And what you're going to see is Physicians Mutual, we just don't throw out products and throw them against the wall and hopefully they stick and some brokers write us. That's not what we do. It took us a little over 4 years to bring this product to market. And I'm going to share with you why it took so long and why, as we see what's going on today in the marketplace in which we serve, why this is such a great product for all the brokers. Also, too, I would like to draw everybody's attention to our dedicated sales support team. This is an administrative support team that's right there in the corporate headquarters. They're not in Taiwan. They're not in the Philippines or anything like that. It's good old Midwestern people that are there at our corporate headquarters to help you through any administrative support from the time you're starting to do that application. So if you're like trying to quote something or you're trying to get into the app or into the portal and to do this application for this life product, they are there to help you. Okay, 7:30 to 6:30 Central Standard Time. They're there to help you. Now, if you already did an application and it's done and it's issued or declined or whatever that is, after the policy issues, then what I would like you to do is then call customer service. This is not the team to call after it's already been issued, okay? So that number to call customer service is 800-228-9100. This is the customer service number that I want you to call, customer service, to call after the policy's either been declined, issued, or something like that. Or so maybe you need to change a beneficiary, you need to change ownership, whatever you need to do, that's who you're going to call after the policy has issued or been declined. So we got somebody always there. There's over 200 customer service reps in our corporate headquarters that are willing to help you. So one of the things that we talked about when designing this Secure Essential Life Insurance product was this. We wanted, number one, is to keep it simple for all brokers to sell. And especially we know, since we've been a health insurance company quite a bit of our life, and with our top of the line innovative G and our top dental, things like that, we wanted also to be top in life insurance. So we wanted it to be simple to approve, which we did. We have simplified underwriting, instant decision when we did this. But we also wanted to help the broker, close the gap, bridge the gap into retirement for their customers. So we're going to talk about that. So it's the Secure Essential Life. It's basically for the 55 and older market today. Now, even though you hear me talk about 55 and older, the actual issue ages are 45 to 80. These are the issue ages, is 45 to 80, okay? So one of the beautiful things about this product is this. It's an instant decision, okay? So as you're going through the app and you hit submit, it's an instant decision within 15 minutes, whether it's going to be issued or declined, or maybe we need to have an underwriter look at it for the next 24 hours, and that would be it. So what we're going to do is it's simplified underwriting, okay? Simplified underwriting. There is no lab work. There is no blood test. There is no saliva test. There is no physical. There is no parameds. So there's no exams, no lab work whatsoever. It's a fully digital application. There is no paper application or anything like that. You will get approvals in as little as 15 minutes. We've seen that they've been instant. Some of the people that have been approved, some are just like that. You hit submit, within a minute, you already have a decision. And we're going to use the ARA Next underwriting tool. We have teamed up with RGA, the Reinsurance Group of America, and we are going to use their state-of-the-art underwriting tool. And I'm going to go through that in this presentation so you know exactly what I mean by that. So this product is a whole life product with term riders. So it's a whole life term blend. The whole life can go from 15,000 up to 100,000. The term can go from 15,000 up to 200,000 of term, okay? The term riders, there's a 5-year term rider that we don't see out there right now, the 10, a 15, and a 20-year term rider. Those term riders are optional. There is no convertibility for those term riders, okay? So that you can't convert it to whole life or anything like that. So we've positioned it so that it's easy to sell for the broker, especially the health broker that wants to do this. So also too, it's built for the 55 and older consumer, because one of the things that we are seeing is we're seeing people retire earlier. There's millions of people that are retired, but they're still working part-time jobs or supporting families. So we know they have longer life expectancies. So we've taken all of this into consideration, and we basically have said this. I think this is really important for all of us to know. We are only one of a few carriers that are offering simplified underwriting with instant decision to the 55 and older consumer at higher face amounts on whole life product. We see in the $10,000 to $40,000 space, there's a lot of competition. There's a lot of carriers that are in that $10,000 to $40,000 of final expense, which I'm going to say is not guaranteed issue. This is not a guaranteed issue product. It is simplified underwritten with instant decision, and that we only have 2 rate classes, and that's standard, basically non-tobacco and standard tobacco. And we will take down to a table 3 risk. So if you're non-smoker, you get standard non-tobacco, a standard non-tobacco, you get that rate, even if you're a table 3, something like that. There is no table ratings or anything. But what I would really like to share with you is this: $50,000 to $100,000. The number of carriers that are selling $50,000 of final expense is dwindling. And then when you get up towards the $100,000 face amounts, there's not much competition at all. A lot of carriers don't want to deal with $50,000 and above from a final expense perspective. So when we looked at that, one of the things that we considered was this: 44% of all people in America today, ages 60 to 70, have a mortgage when they retire. 17% talk about never ever paying off a mortgage. And almost a third of all people say we're going to have to pay on mortgages for at least 8 more years. So the days of having homes paid off before you retired is kind of gone by the wayside. That used to be 25%, way back when. But nowadays, that's not the case. And the scale of that problem is over 10.5 million people. Another scary statistic, I think one that really alarmed me, was this one. I guess maybe, what did they say? Sometimes if they ever leave the nest, they come right back to the nest, because 47% of parents today still financially support an adult child, and they spend an average of over $1,474 a month on that adult child. 37% of people today that are going into retirement have auto loans. And we all know that these auto loans are higher than they've ever been in American history. The cost of a car is skyrocketing today. We have gas prices that are skyrocketing. And then almost 2/3 of all seniors today retire with non-mortgage debt, including 1 out of 3 of them will have over $10,000 in credit card debt. But I also saw a statistic that seniors that carry student loan balances into retirement, the average student loan balance was still over $40,000 that they were carrying into retirement. And I just was floored when I was told that statistic. So the bottom line is this: we are trying to help seniors bridge the gap from their working years into retirement with this product. Why? Because 77% of them do not retire debt-free anymore. Where it used to be, that used to be the big thing. As soon as you got to be debt-free, you're ready to retire. Not no more. When it came to developing this product, we wanted to get it to market, but we said, wait a second, we got to understand who Physicians Mutual is when it comes to the life market and who we are not. So what we did was, it took over 4 years to bring this to market. We know COVID was in there, so it was probably a good thing too. But we had to figure out what niche we were covering. We realized real quick in that under 55 marketplace, we are not the income type replacement carrier where you're writing big face amounts of term, 10, 15, 20, 30, and even 40-year term policies. That's not us. And then, the big universal life policies, that's not us, that are fully underwritten and things like that. That's really not who we wanted to be. We said, do we really want to be in the wealth transfer business with all the financial planners that are writing, $500,000 of face amount and above, that's whole life, that's index universal, that's variable universal, all of those plans, and it's fully underwritten, it's done by planners. That's not who we are. Who is it that Physicians Mutual tried to be? Well, we really wanted to be in that 55 and older marketplace. We know today we do sell a true graded whole life, 2-year waiting period, final expense, guaranteed issue product. We do 5 to 20,000 is what we do in that space. It's guaranteed issue. It's just personal questions, no medical exam, no medical questions or anything. True guaranteed issue, 2-year waiting period. But we only sell that to people that have a Physicians Mutual Med Sup in the household. Okay, that's the only time you can sell it, is if there's a Physicians Mutual Med Sup in the household. And that's when it goes to 45 to 80 also. And then we said, okay, we started looking at the market, and we saw, okay, we've seen a lot of people in that 10 to 40,000, a lot of competitors in that 10 to 40,000 final expense space. But we said, okay, do we really want to compete in that? And the answer was yes, we do, especially on a simplified, underwritten, instant decision basis that is marketed by multi-level IMOs, FMOs, things like that, and brokers. And we said, okay, but we really want to be more than that. What we really want to be is this. We want to be in that whole life term perm blend market, where that whole life, again, is anywhere from 15,000 up to 100,000 of face amount. And the term is anywhere from 15,000 to 200,000 of term, with a maximum, I'm going to say this a couple times, a maximum combined face amount of 250,000. That is the maximum combined face amount of whole life in term that you can do. Okay. And then when we teamed up with the Reinsurance Group of America, the reinsurer, we wanted to make sure that we were doing it on a simplified, underwritten basis, and we were using RGA's ARA Next state-of-the-art underwriting tool. And it's sold by brokers just like all of you. Okay. So here's a state availability map right now. So we rolled this out on May 11th of this year, like Mark said, about a month ago. And we wanted to make sure that we tried to get in as many states as we could when we first rolled it out. Okay. So you see, these are the day one states. So on May 11th, the states that are in yellow went live. Okay. The states in yellow are where we're at currently. Now, day two, these states will be down the road, the states in the green. We are actually being active with the departments of insurance in these states. We're going back, answering questions that they have, things like that. So hopefully that will come day two. Now, do I know when day two is? I don't know. If somebody said, Mike, what do you think maybe in the next couple months? I'm going to say probably not in the next couple months. It might be later this year, early next year, I'm guessing, but I just don't know for sure. But I'm sure as soon as we get those approvals, that we will get them out and ready to sell as soon as we can. So it's the yellow states that we are in currently, and the green ones we are working with the departments. So when it comes to the structure of the product, it's a blended whole life term structure. It's a whole life base with optional term riders of 5, 10, 15, and 20 are those term riders. Okay. These are the term riders. There is no convertibility. You cannot convert a term rider into whole life. There is no convertibility with this plan. Okay. I said earlier, it has a maximum combined face amount of 250,000. The issue ages are 45 to 80, 45 to 80, and the term riders go basically from 45 to 70. So think about that, 45 to 70 for the term riders. 71 to 80, there is no term riders. We do have an accelerated death benefit rider that's at no cost to the customer. It's included in the policy, and we will provide up to 50% of the total death benefit upon a terminal illness diagnosis. So if we had a 50,000 whole life and we had a 50,000 term, well, let's say it's a 10-year term. So that's $100,000 of combined coverage. We will allow you to have 50% of that. So we would give you 50 grand that you maybe could help with, pay some of your medical bills while you're still living, or whatever you need to help stay alive. Maybe it's your rent. We don't know, but you might need that 50% of the total face amount to get upon a terminal illness. We do have an accidental death benefit rider. It's up to 2 times the face amount of the whole life in the term with a max of $250. So let's say you did have a $50,000 whole life and a $200,000 term rider. So that's $250,000. Okay. You can have another $250,000 of accidental death benefit. Okay. So if you died of an accident, you would actually get $500,000. Okay. 200,000 from the rider and then 200,000 from the policy. And that's very, very inexpensive. I don't like to use the word cheap, but it actually really is cheap, that accidental death. So let me just do this again. Whole life face amounts, 15,000 to 100,000. The maximum face amount on a whole life 71 to 80 is 50,000. So keep that in mind. Once you get to be 71 up to 80, the max on whole life is 50,000. Their level premiums and benefits are payable to 121. The policy endows at 121, and we would pay out the full face amount if that was the case. The cash values increases as premiums are paid. You can use that cash value to take out a loan if you want to. The loan interest rate is 7.4%. Now, you can pay that back over time. You can pay yourself back, which is a good thing to do. Or if you don't want to, we'll just deduct the loan balance because it's going to grow at 7.4%. We will deduct the loan balance from the total death benefit upon someone's passing. And then we have the whole life. Remember, you can go down to age 45 and up to age 80 with that. The term riders, I said earlier, were 15,000 up to 200,000. And you really don't see a lot of people out there doing term riders, let alone go down to $15,000. So you have that. And then what I really like and want to point out is this 5-year term rider. It's a level term. Premiums won't go up during that time frame. We do have a 10, we do have a 15, and we have a 20. But the 5 is very unique to Physicians Mutual. And we're seeing people using it already. They like that rider. The rider expires at 95. The rider does not expire at the end of the term period. So if you, let's say you had a 60-year-old and they bought a 20-year term rider. So that takes them to age 80. That term rider, it can go away if you want to. You can just say, nope, I don't want it anymore. And it's going to be too expensive. But what it will do is it basically will turn into annual renewable term. And we'll allow you to pay that annual renewable term up to age 95. At 95 is when the rider expires, okay? But we know that most people, after the 20 years, they won't continue to pay on it. They'll just drop the rider and the premium will go down. And then the only thing you're paying on is the whole life part of the policy, okay? So your premiums will go down after that rider goes away, whenever that may be. But like I said, maybe you are 80, 81, and all of a sudden your health started to deteriorate really quick. Well, if that's the case, maybe you want to pay that ART premium for a year or two so you could collect on the death benefit. With the issue ages for the term riders, the 5-year goes from 45 to 70. For the 10-year term rider, you got to be 45 to 70. For the 15-year term rider, you're 45 to 65. And for the 20-year term rider, it's ages 45 to 60. Okay? So it gives you, even though it's permanent protection, it gives you affordability. So here's what we did. It's a real live example. we went into our assessment tool in the Physicians Mutual portal, and we found out that Jennifer and her husband, they're small business owners. Jennifer needs $100,000 worth of coverage, and she needs it until they sell the business in 5 to 7 years. Now, 7 years is going to be the key time frame in this example. So they want to sell it, and they want to have some type of retirement and whole life protection in case of an emergency. So we determined that Jennifer needed $100,000 a whole life. Okay. So here's what we did. We said, okay, we can go down to $15,000 a whole life with $85,000 of term. And we did a 10-year term rider. Why? Because she needs at least it through 7 years. 5 years probably is not going to be enough. So with that being said, that premium would be $105 for this 59-year-old. And these are real rates. We also said, hey, within our quotings in our portal, what about a $50,000 a whole life with $50,000 a 10-year term? That would be about $188. And maybe that's more with what she's looking for. But we said, okay, what about this? $85,000 a whole life with $15,000 a 10-year term. We could do this at 71. And somebody asked me on my last call, Mike, what if she wanted just $100,000 a whole life? Well, that one was 309. Okay. So you see, there's 4 different price points here. So we can make sure that we can fit the budget of this customer. So you get, for $100,000, you can make it super affordable if you really like. If you want a whole life, we're still going to be super competitive there. But we're going to give you options with our quoting software. And it's all backed by the A+ ratings from AM Best, the A+ ratings from the Weiss Ratings Service, Standard & Poor's. You got Moody's, Fitch, all of those rating companies. We have the top ratings. So what I'd really like to say is this life portfolio offers affordability of term insurance bundled with permanent whole life protection. By blending that whole life base part of the policy with optional term riders into one solution, you actually saw that with the last example I showed. It gives them flexibility, and it also gives you, as a broker, a competitive edge against the other competitors. Okay, so what I'd like to do, I'm going to get rid of that. Let me do this real quick, Trevor. And I want to share with the group the competitive analysis. Can you see that?
It's not sharing, Mike.
Okay, let me go back to my go-to. Oh, it says share. Hit share. Can you see it now?
Yes, sir.
There we go.
Okay. So I'm going to make this a little bit bigger for everybody. So as we go through this, I wanted to show you what $30,000 of just pure final expense, $30,000 a whole life, simplified underwriting, instant decision, age 65, non-tobacco. You see how competitive we are. Here's all the other competitors out there. I just threw this list together. I went to CSG and put this together for everybody, and just thought about, I put out here the competitors that I hear that, Mike, you're going to have to go up against. So I put that out there. Here's the rates. But what I want to draw attention to for everybody is, look what happens if somebody just can't afford $157. What if we did $15,000 a whole life, $15,000 a 10-year term? We can get that down to $112. Maybe that's more affordable for the consumer versus just the $30,000 a whole life. But we will play in that market space very well, as you can see. Now, let's take it one step further. And now let's look at $50,000 a whole life. Okay. A little bit of $50,000 a whole, let's make it a little bit bigger here. $50,000 a whole life with age 65. Well, there we go. 260, 196 for a male, female. But then you notice that the number of competitors actually got smaller. because there's been some competitors pulled out now. They just don't want to go up to 50,000. But let's say this person can't afford 260 bucks. Look at, if we did 30,000 a whole life, 20,000 a 10-year term, we got it down to 200. If I wanted to go 20,000 of whole life and 30,000 a term, I would get it under $200. Look how competitive that is with all the other plans that are out there. And then I said, let's look at 100,000. And I said earlier in my presentation, I talked about how the 100,000, there wasn't a lot of players in that market space of 100,000 of whole life with simplified underwriting, instant decision. And when you look at two of the major competitors, how competitive we are super competitive. But then I want you to think about the customer right now and the affordability aspect. Maybe they just can't afford 380. They're they're female. They just can't afford 389. Well, how about dropping it to 201? But that's with 30,000 a whole life and 70,000 a term. I can actually drop it down to 15,000 a whole life, 85,000 a term, and I can cut the premium by more than half if I have to make it affordable. And that term, they might only need that term for a set period of time anyway. And then I said, well, while I'm at it, why don't I show everybody here at Pinnacle what it looks like for a 55-year-old? 100,000, simplified underwritten, instant decision, whole life policy. That was 327 and 265. Remember, all of this just came straight from CSG. So you see that we are still very competitive in that marketplace. And because I told you about that 55 and under market. Well, look at this. If I did 30,000 a whole life and 70,000 a 10-year term, that's 158. That's 60% less than the 327. Okay. And with the female 265, I can get that all the way down to, with 30 and 70, 115. It'll actually get to about 100 if I use below 100 for 15,000 a whole life and 85,000 a 10-year term. But I didn't even use the 5-year term riders on this because I didn't think that was fair, but it would be even cheaper yet if I used the 5-year term rider. So you can see we are super, super competitive in this space. Here's the 55-year-old non-tobacco, 50,000. We are super competitive there. And then it's more affordable if you use some of the term riders. And then if you did 30,000, that $10,000 to $40,000 space, I said we will compete all day in that arena. So I've had people tell me, well, Mike, I'm just going to use you for the whole life part. You're that good anyway. I said, well, great. I appreciate that. But I just want to make sure everybody understands we were considering the consumer first with affordability. And we thought about these term riders, especially being a niche with that 5-year. We wanted to make it more affordable for that customer. Okay. Can you see this underwriting, Trevor?
Yep, you're good.
Okay, we're good. So as I go through this, and then I'm going to turn it over to Trevor real quick. With this underwriting tool, I think this is the coolest part, is the RNX underwriting tool. And what it's going to do is the agent's going to begin the application here. And right away, after we get through the personal information, we're not even going to go into health questions or anything. We are going to need to collect a DocuSign. That DocuSign can be either done by email or it can do it via text on somebody's cell phone. Okay. So if you do that, the thing that everybody needs to know is this. There's a code to get into the DocuSign, whether it's email or it's text, either one. And this tool will send it to them, whatever you choose. They'll send them the text. And what will happen is it'll blow it up on the phone a little bit so you can see it. But there's a code to get into the DocuSign. And it's the last 4 digits of their phone number, okay? That's on the application. It's the last 4 digits of their phone number. Whether it's the email that's sent to their email address or a text, it's the last 4 digits of their phone number, okay? And you're going to have to take the few minutes and get the customer to sign it before it goes any further, okay? Because what happens next is we're going to go out and we're going to collect vendor data. We cannot collect vendor data until we have the HIPAA authorization signed, okay? So once we have it signed, we're going to use that Aura underwriting tool. Here's what's going to happen. We're going to gather an identity verification report. We're going to make sure this is a real person, that we're not trying to be frauded, right? We know that people sometimes out there, they'll try and make up people or use dead people's identification to get a cash advance or an advance on a policy or something. So we're going to do an identity verification report. We're going to go pull a criminal history report. We're going to go pull a pharmacy report, a drug check report. We're also going to go pull any medical data that Milliman has on this customer. And we're also going to pull a predictive mortality score from Milliman. They're going to give us that. We're also going to pull a motor vehicle report, and we're going to pull an MIB report. Okay? This, what I think is pretty cool. This is how we are going to do the underwriting. We're going to underwrite it from all of these data vendors that we go out to, okay? That's who we're going to do. There is no medical exam. There is no paramed. There is no blood work. There's no APSs. It's a total digital application that's fully underwritten by all of these reports. That's how we're underwriting. It's instant underwriting decisions. And this way, there's fewer delays and fewer touch points for the broker, okay? So as we do that, we start pulling all that vendor data. We do the MIB, and if we see something there, we do what we call reflective health questions. They'll be at the end of the app. They'll pop up. The agent and that customer never know that we just added a couple questions if we don't know something in there. But that's how this tool is working. It has internal underwriting rules. And then when something doesn't quite seem right, we have what we call reflective questions that we pop up at the end of the app, not just right during the middle. We'll pop those up and we'll ask that they answer those, okay? But like I said, the agent or the customer will never know that we added, 5 more questions or what it would be, okay? After the agent finishes the app and hits submit, the results from this underwriting tool will determine whether it's an issue, whether it needs to be referred to an underwriter, which they say maybe 15% or less, or a decline, okay? So it's going to be within that 15-minute time frame. We've even heard that it's been instantaneous. Somebody hits submit, and bingo, we get an approval right away, just like that, or a decline. What I would want everybody to know is at no point during this application, okay, at no point will it stop you and say, nope, this person's a decline. You will not know they're a decline until you hit submit and you finish the application. What I like about this is this. You get consistent underwriting decisions. There is no human element in this. It's instant underwriting decision on a consistent basis. So if an underwriter was having a bad day, you really didn't want your case to go to that underwriter with that carrier. You wanted it to go somewhere else. Well, it doesn't matter here because it's the optimized sales process with that consistent underwriting decisions from that. We also determined that we wanted to do what we call a bundled approach with underwriting. And with that underwriting, it's just going to be a yes or a no to all of this. And then if you do answer yes, that doesn't mean it's a decline. It might, we might go in and look at the other data vendors that we pulled reports from, and we might see, well, that was, skin cancer, and that was 15 years ago. It's not a big deal. Okay. So it's not a decline if you answer yes to this. There is no yes, no questions to each one of these bullet points. There isn't. It's just a yes, no to the whole bundle of questions. Okay. And then it's either, decide whether it's approved, whether it's referred to the underwriter. And if it's declined, I want everybody to see this. The letter's going to go to the customer. I've already had brokers say, well, Mike, I want the letter to come to me. Well, all of us know that that's a violation of HIPAA. We cannot tell you what was in the letter. The customer can, we can't. So the decline letter is going to go to the customer, and it will provide the source of the information, okay, of where we got it. It will provide that vendor contact information, what vendor we got the information from that led to the decline. And if they want to obtain a copy of the report, they can contact that vendor. Or if they want to dispute the information, they have to go back to the vendor. We won't know that. So there's no good, that doesn't do a broker any good to call the Physicians Mutual underwriting department when they need to go back to the vendor first. And if they dispute it, they need to get that information cleared off that vendor's data, and then they can do a new app or they can appeal it with us, okay? But it doesn't do any good to come to us. We're not going to know anything like that. Trevor, do you want to jump in here?
Yes, sir, I sure can. So, let's see, Mark.
Let me go ahead and switch you there, Trevor. One sec. Thank you so much, Mike. That was excellent. We certainly appreciate that. And here we go. Trevor Braun Jr. You should be able to share now.
All right, the real Trevor Braun is here. Thank you, Mike Story. As always, you do a phenomenal job. For those of you that don't know, Mike Story has been part of Physicians Mutual for what, 35, 6, 7?
33 years.
33 years. Unbelievable. He's got me by 13 years. He's also a lot older than me, so we'll use that as an excuse. No, excellent job in training, Mike. Thank you so very much. Mike is our national sales trainer, and I am your broker manager here with Physicians Mutual, for those of you that do not know me. And outside of the nuts and bolts, product specifics, underwriting, all the great stuff that Mike just went through, I am here to show you the money, because obviously we do not want to be doing all this for free. So where you lead yourself somewhere legendary, guys. So for those of you that don't know, Physicians Mutual, not unlike a lot of carriers, does a annual incentive trip. However, even though I've spent my entire career with Physicians Mutual and been on many of their trips, have no idea how the other ones do it. I've just heard from agents and brokers that Physicians Mutual does it right. So super excited to share with you guys. If you didn't already know, you are, if you're contracted with Physicians Mutual, having an opportunity to qualify for a trip to Scotland based on your sales. Okay, so how do you get to Scotland? So what Physicians Mutual uses is we use what we call production credits, which is really nothing more than annualized premium. However, you can see that there are a couple of product scenarios where it will actually give you the annual premium times 2, okay? So annually, you need 300 production credits, of course, production and eligibility requirements. For those of you that are familiar with our Medicare supplement plans, we have a phenomenal suite of Medicare supplement products. We do have a patented innovative Plan G. Anytime an agent sells an innovative Plan G in an open enrollment or underwritten situation, that's going to be 2 times the annual premium. So let's just say, for easy math's sake, annual premium's $2,000. You'd actually get 4,000 production credits. Same thing with any other underwritten med sup, and then any other other than innovative, an F, a G, an N, a high deductible, that's going to count as one, or your actual A and BP, annualized new business premium production credits there. Now we also have dental, phenomenal dental product, great cancer product, but of course focusing on our life product. And we have had a lot of movement with that life product here over the past 3 weeks or so since we launched it, and seeing some pretty darn big premiums, some as high as $4, $5, $6 grand. So again, all of that going towards those production credits, and do understand that the commission is 100% of the whole life face amount, and depending upon the length of term, will range from, I believe, on the low end, somewhere around 70 up to 100%. So very, very competitive commissions there. Again, wonderful opportunity to earn a trip, but there's more. We do have a specific quarterly bonus for this Secure Essentials Life product. It is a quarterly bonus, so it's quarterly qualification as well as being paid quarterly. Of course, you have to write good business, so there's placement rate, persistency rate requirements, but an agent writes 5 to 10 of these, or should I say issues 5 to 10 of these within a given quarter. Not only will you get commissions on those, not only will they count towards your trips, but you will also have an opportunity to receive $50 per policy on top of all of that. You write 11 to 20, you're getting $75 per policy, and 21 plus with no cap, $100 extra bonus per policy on this Selly Life product. But wait, there's more. So we do have a wonderful monthly Medicare supplement agent bonus, okay? In order to crack into that bonus, you have to have issued 5 Medicare supplement, 5 eligible med subs, so no GI, just open enrollment and underwritten in order to crack the bonus. Once you hit that 5 issued in the month, we will go back and pay retro to Act 1. You can see those bonuses, depending on the situation, range anywhere from $200 to $30 per application for that Medicare supplement. And where this life ties in, we actually have a cross-sale incentive, a combo application bonus. So with a combo app, dental, life, cancer, sold with a med sup, primary insured's name and application dates must match on both policies. So if you've hit your 5 issued, you're into that med sup bonus, and you cross-sell 1 additional product, that's $25. You cross-sell 2 additional products, that's $40 per app for a total of $80. And you cross-sell 3 additional products, that is $50 per app for a total of $150. And you can use the life insurance, this new Silly app, to really double dip, if you will, in the bonus. It'll count for that quarterly bonus, but then it would also count as one of these additional cross-sale apps you can earn bonus on for your MedSup bonus. Okay, so a lot of moving parts there. Bottom line, more you sell, more money you're going to make, more chance you're going to get to go to Ireland, and more lives you are protecting with your clients. So just to put a bow on this, and then I'll see if we've got any questions. Again, major portfolio differentiators, just to make sure that we're on the same page. Again, instant decision, 15 minutes or less. That Aura Next underwriting tool is absolutely awesome. Those whole life face amounts going up as high as 100,000 while continuing or maintaining that simplified issue, not having to go run around, chase labs and all that stuff. Again, max bundle for a final expense policy to go up to 250 grand with that term rider is unheard of. 5-year term for those in or nearing retirement. Again, looking at the bonus, standalone life bonus with additional cross-sale bonus. And I know that Mike mentioned it a couple of times, but the Reinsurance Group of America, RGA, partnered with, collaborated with, not only to develop this product, but also with their underwriting tools and everything, just to get it as smooth as possible. And Physicians Mutual has a history of innovation with our Innovative G, with our dental, with no deductible, no out-of-pocket max. And then we add on this new life product, and you get to say hi. Say hi to everybody. This is Gage. I love you, buddy. Let me finish up. But just a absolutely fantastic partnership with RGA all around to, again, help you bring you guys a neat, unique, innovative product, which Physicians Mutual is known for. So without further ado, do we have any questions out there, Mark? I know I can't see the chat other than just between us.
Well, excellent. Yeah, and I'm going to pull those up here. I know you guys both did a great job of really going through, Mike, with the underwriting and just all the mechanics of how the policy works. So we're not really getting too many questions on, hey, is this health condition suitable and so forth. One of the questions I do see is state availability. Are there any states that this is not available in? I'm not sure if maybe the standard New York is is disqualified as we usually see, or any others. So if you could attest to any of that, or
Yeah, so I just went ahead and pulled mine back up, and I am
oh, there it is.
unbelievably terrible with geography. So, yeah, New York out there not having it. I don't know what these other couple of little ones up there in the Northeast are, and then, or is that Oregon or Washington? Is
I
that
think that's
Washington.
Yeah.
Massachusetts. Oh, and then Washington. Yep.
Yeah. So there's only, maybe what, two or three that are not going to be available. As Mike had said, anything in yellow is available to be sold today. Anything in green is day two. Mike, I know you have your pulse a little bit closer to things than I do, being up there in the home office a good bit. Do we have any type of idea? Are we looking at later in 26 into 27? Really don't have an exact time frame for those day two states.
Yeah, I would say, like I said, it actually what it's depending upon. Most of those states, I do know we're going back and forth with the department. There's something that they don't like, or we're having to explain to them why we're doing this. And so, yeah, you don't know. I probably by the time this is recorded and put out there, there'll be something that changes that I just don't know about yet. But I'm probably saying later this year. I bet you there's at least a couple more that pop up and will be available at least by the end of the year. But it just kind of, I know we were really, really after Florida. Ohio was another one. Kansas was another one. California, that's a whole nother story out there. North Carolina, I know there was some things within the filing they were talking about. So, I know it's a vague answer, but I just don't know exactly when that's going to happen, because I always tell people is this: you always, once we get approval from the Department of Insurance, it's usually probably a good 45 days before we can get it tested onto our portal and onto the system, and everything's working correctly. So, it isn't just, hey, if we actually approved one today, you're probably not going to see it for 2 months until it gets out there. We have everything tested and ready to go.
Yeah, no, and that's perfect. We certainly understand that. We see this certainly with new product rollouts and everything. Good news is it's in the majority of states. So, most of you that are watching, sell in, these majority of states, and we'll keep you posted as well. Anytime new states roll out, or as we start to get some updates, we'll certainly place that on our website news. And you can always check too, like if you're not sure, just go onto the Physicians Mutual quoting software on the website. And if you choose the state, it's not going to pull up, obviously, if it's not available yet.
Yeah.
And this map here is perfect, and we'll be sure to distribute that to everybody that's on the call, as well as some brochures and some of the info Trevor was talking about. But I'm just getting a lot of just good comments here, not so many questions, because like I said, Mike, you went through thoroughly, like extremely thoroughly, more than I've seen most reps go through this stuff, and I think you really answered a lot of questions that agents normally have, because you did such a great job going through that from A to Z. So we certainly appreciate that. And my take on this too, I've been doing the life insurance, the final expense for the last 10 years, and to Mike and Trevor's points, it's very rare that you see any of these carriers go really higher than maybe 30,000. So this is very unique, having the 50,000, even 100,000. And I can't tell you how many calls I get where, hey, my client's 72 years old. They want 75,000. They don't want to have to do a medical exam. They need it by next week. They can't sleep till they have this done. Oh, okay, great. Well, it's going to cost $700 per month. Oh, what? So with all of the combinations that, and Mike did again such a great job with showing you how we can get to that number. So if it were 75,000 that your client needs and they're 72 years old, we could do a 15,000 of whole life with a $50,000 term rider, and then you go back, you ask your client, if where are you coming up with that number? Is it because that's how much you have left on your mortgage, or are you just looking to have the most expensive funeral for for end of life? So a lot of times, once you have those conversations with clients, where are you coming up with these numbers? That's really where this product shines, because again, let's say they have 10 years left on their mortgage. Perfect. All right, let's get that extra coverage for with that 10-year term rider, so that by after that time, that large death benefit amount is not going to be necessary. So this is the most unique product I've seen, and I really feel like since we brought this on board with Pinnacle and we get this out to our agents, I mean, we're really going to see this easily soar to the #1 most popular product because of this flexibility. And again, we all know the cost of regular final expense, for $20,000, $25,000. When you start getting into that territory, it starts becoming a couple $100 a month, and that's where you'll see these cases lapse and chargebacks occur. So this is something perfect, where you're not only getting more for what you for what you want, but the cost is much less going with this combination of term and whole life. So again, we certainly appreciate you guys. You guys have been great partners with us, and I'm sure we'll get a lot of feedback over this from the next couple weeks after we post this on our website, and kind of follow up with a lot of the agents that have the Physicians Mutual contracts. We're going to get a lot more agents that are going to want to offer this that are not currently appointed. So I'm sure we'll be in touch, and maybe we'll do another sort of maybe a follow-up webinar in the next couple months as we start to grow in popularity here. So again, without further ado, certainly appreciate Mike and Trevor for their time.
Thank you.
Trevor Sr. and Trevor Jr., we love it. And you guys just really did such a phenomenal job, and the Physicians Mutual as well for coming out with this product. Like I said, I could see this being our #1 plan, from this day forward, because of how special and unique this is. So
well, that's exactly
thank you guys
what we
so
want.
much.
We want you guys to be our premier partner on this this Selly life insurance plan. So let us know what we can do to help. Okay, brother?
Thank you so much, guys. We certainly appreciate it. I hope you have a great rest of your day. And anybody on the call, we look forward to hearing from you. Again, feel free to reach out to us here at Pinnacle, 800-772-6881, or you can go onto the Pinnacle website, pfsinsurance.com. You can get contracted for this product. You can schedule a call with one of us here so we can go more in depth. You can email us at support@pfsinsurance.com or lifesales@pfsinsurance.com. Doesn't matter, but everything is here on our website for you guys to contact us, and we look forward to hearing from you all. So thank you all again, and thank you to our partners over at Physicians Mutual. Guys, have a great rest of your day, and we'll be in touch shortly.
Thanks a lot, Mark. Take care, buddy.
Thanks, guys.